Good morning. This is Hampton Roads Real Estate News for November 3rd, 2025. The big news this week is the lowering of the Fed funds rate by 0.25% last week. This puts the FOMC's target rate between 3.75 and 4%. However, that may not be the most important Fed move announced last week. The Fed is going to end quantitative tightening by December 1st, which may have an even bigger impact on mortgage rates than the Fed rate cut. In QT, the Fed sells bonds or holds them to maturity as a means of reducing the amount of liquidity in the financial system. QT is intended to cool a hot economy and combat inflation by making fewer dollars available in the economy. When you have less of almost anything, including dollars, that item becomes more valuable. This manifests in the economy as more buying power per dollar, aka lower inflation. This also makes the price to borrow money, which we call interest rates, higher, because consumers have to pay a premium to purchase the more scarce dollars. Therefore, ending QT means there should be more dollars available in the economy to borrow, and rates should tick lower. This is also an indication that the Fed's concerns over inflation are abating. Many economists and financial experts believe QT can have more impact on mortgage rates than the Fed rate. We know that housing affordability has been on the minds of Fed governors, and that the housing component has been a major factor in the inflation story over the last several years. Ending QT may indicate both that the Fed is directly trying to impact housing affordability and that future rate cuts to the Fed rate may be less likely or less frequent in 2026. Of course, if the Fed's QT play works and mortgage rates drop significantly, buyers who continue to wait may find themselves with a lot more competition in the spring, and we could even see the rate of home price increases tick back up. Ultimately, supply is the ultimate determining factor in affordability, and a new report from Morgan Stanley says that over the next 10 years, the U.S. will need 18.5 million new units of housing just to prevent the current shortage from worsening. However, the report goes on to note that less available labor, higher costs, and governmental hurdles make increasing annual housing production by nearly one-third a daunting prospect. In sum, the odds are in favor of a continued short housing supply and affordability challenges in the U.S. for the foreseeable future. In August, according to the Case-Shiller Home Price Index, home prices rose 0.2%, reversing a 5-month trend to the downside. In the week of October 24th, mortgage refinance applications more than doubled year over year, and applications for new mortgages were up 20%. This coincides with the beginning of the recent rate declines and suggests that we may be seeing a thaw in the frozen real estate market due to improved affordability. Recent surveys show that many buyers are waiting to buy until mortgage rates fall below 6%, but this could be a mistake. Many experts still don't see rates below 6% in the cards until the end of 2026, and that's not guaranteed. On a $400,000 home loan, the average national price for a home, the difference in the monthly payment between last week's 6.17% and 5.99% is only about $51 a month. However, home prices are still rising in Virginia Beach at just above 4% annually, according to RPR. That means the average Virginia Beach buyer who waits for a year for a 5.99% rate could miss out on over $16,000 in accumulated wealth through equity to maybe save about 600 bucks. The right time to buy a house is when it's right for you, but year after year the data show that the best time to buy to increase your wealth is always in the past, and the second best time to buy is always now. The rental market remains strong. However, the reason may be a surprise. Rents are increasing at roughly the same rate as home prices in most markets. However, it isn't increases or new leases that are driving profitability in that sector, it's renewals. With years of affordability challenges behind them, many potential buyers have resigned themselves to renting longer term. While this has been good news for landlords, it remains to be seen how many of these longer term rentals may now see their opportunity to become owners. It may also be a perfect time for landlords to realize some profits on their rentals by selling in this more friendly environment, perhaps even to their existing tenants. Finally, a recent survey of home sellers reveals that 79% of them wish they had sold sooner. Many had held off selling in hopes of timing the recent price run up and getting out at the top, only to be surprised by a suddenly frozen market and the return of price adjustments and concessions. Many sellers have been forced to sell under less favorable terms, and many more have refused to sell rather than take a haircut on the paper gains they saw in recent years. With rates lower and mortgage applications way up, this may be the time for sellers to re-enter the market. This has been Hampton Roads Real Estate News for November 3rd, 2025. I'm Coach Drew Little with the Home Run team at Real.